Hi, everyone. Thank you for joining us today. This is the last session of the day, so we'll make it quick and succinct, yeah? We'll be discussing 2020 and beyond, the GCC cross-border payments and roadmap. And with me, I have Amit Agarwal. He's the Managing Director and Global Business Head of Cross-Border Payments at Citibank. Amit, if you could wave and say hello.
Hello.
Yeah. Hi. And we also have Naveen Gupta, who's the Managing Director of South Asia and MENA for Ripple. Hi, Naveen. Thank
Hi
you both
everyone.
for joining us today. Right. So we'll begin with an introduction with a question for both Amit and Naveen to sort of set up the conversation. So Amit, if you can begin. For some time now, Citi has held the title for having the largest proprietary cross-border payments network, including the largest cross-border ACH footprint. But I understand that you've been on your own digital transformation journey. Can you tell us a bit more about that and why digital transformation in the cross-border payment space is very important?
Sure. Thank you, Nabila, and good afternoon, everyone, to our colleagues around the region. And I hope everybody is keeping safe. So let me just respond, Nabila, to your first question. Uh, I think I'll start by saying that the payment landscape globally is continuing to evolve at breakneck pace. And that's really driven by certainly what I see from our shifting demands of our customers globally. And our customers are looking for faster and smarter payment options, and they're looking for providing more options of payments to their own counterparties. We also recognize that the evolving digital and e-commerce landscape requires enablement of smarter payment options. And as part of our own journey here at Citi, we have been heavily investing over the last couple of years in building our own digital journey for transforming the customer experience in cross-border payment. And it is anchored in our vision where we see a future where payments can move from anywhere in the world to anywhere in the world as if there are no borders, as if there are no currencies, as if there are no constraint. And that's the future. That's a word we believe
Mhm.
in, and that's the future we believe that is possible. And in terms specifically around our digital journey, what we have been doing to make this possible is we have been significantly expanding our payment reach and payment options. So, for example, you mentioned global ACH. We have that now available in over 60 markets using our own proprietary branch network. But beyond just the ACH, I think the biggest shift that we are starting to see is in new digital cross-border payment methods. So a couple of examples quickly. One is we are heavily investing in enabling cross-border instant payment, and that leverages our organically grown branch network across the world, where we are stitching together this network that can be always on and access instant payment schemes on a 24/7 basis. We have just recently launched cross-border instant payments in the UK and Singapore, and we've got several more markets lined up. Another area where we have been very bullish and have been investing is enabling payments into digital wallets and working with a number of global wallet providers, for example, M-Pesa in Kenya or PayPal globally. We believe that by enabling this digital method of payment, we can bring significant new value for consumer based flows. And then the last point I will make is we have been also investing a lot in data and making real time information available to our clients. And in order to do that, we have been doubling down on building 24/7 API based infrastructure. And these APIs can do everything from payment processing to live FX rate streaming to payment formatting status reports, and so on. So when you put together all of these assets, our proprietary branch network, coupled with our investment in digital solutions and supported with our APIs, we believe we are at the cusp of starting to really deliver a very digital payment solution for our clients.
Okay, thank you for that, Amit. I would also like to talk about how the pandemic has obviously changed this. But before we go to that, Naveen, so Ripple, this question for you. Ripple has been different from other companies in the cryptocurrency space. You've long talked about the possibilities of using cryptocurrencies or digital currencies to solve pain points with cross-border payments. What traction have you seen?
Sure. So first of all, Nabila, thank you very much for having me. And I stand in the middle of your audience and drinks, so possibly I'll keep it succinct and sharp. Fundamentally, what Ripple is doing is Ripple is building the plumbing for the internet world, right? We believe that money should move exactly the way email moves today, right? So Nabila and Naveen can send an email to each other, and we can send hundreds of emails at almost negligible instantly and with almost zero error rates. And it is possible because the internet for data was built 20 years ago, which we are all able to utilize. And now Ripple is building internet for money, or internet of value. That's what we call it. Right? So we are an enterprise blockchain company. And let me take a real example so that I can make it real for everyone in terms of what we are doing. So fundamentally, whenever there is a regulated financial institution, it could be a PSP or a MTO or a bank, they have three costs when they are doing the cross-border remittance business. So the first cost is cost to acquire a customer or to acquire a transaction. The second is that they keep very large amount of money, which is called as nostro accounts, or you can call it working capital for banks or PSPs, in the beneficiary markets where they need to deliver the beneficiary payment. So for example, if you are a PSP based in UK, you would have a pre-funded account in, say, Philippines, so that you're able to pay out the Philippine peso payments on the behalf of your customer. And our estimate is there is about $10 trillion that is stuck there in working capital for financial institutions who are trying to make these cross-border payments possible, right? And then the third part is your IT infrastructure cost that our customers need to have. So by putting the new plumbing in place, Ripple is tackling two of these large portions of cost, thereby helping customers to have a lower cost and a much better customer experience. So the first thing that we have done is we have built a single API for the world, right? So when two institutions connect with each other, if they are on Ripple platform, you can use the same API to connect with more than 300 institutions around the world, and you don't have to change your technology, you don't have to change your backend. You have one single API that essentially works. The second thing that we have done is we have taken the need for having the beneficiary market. So let's take an example of Philippines, where there are regulator approved digital asset exchanges or cryptocurrency exchanges. Say, let's assume there is a PSP, a regulated PSP in UK. Instead of having a pre-funded account, now what they're able to do is they're able to take £1,000 and convert that into XRP, which is a digital asset that is very sharp and quick, and it's particularly suitable for payments. And in 2 seconds, that XRP travels to Philippines, and again, in a government-approved regulated exchange, it gets converted from XRP into Philippines peso, and the payout happens. And this can constantly happen 24/7, 365 days a year, without any need for a pre-funded position in Philippines, which would happen in the traditional model. So what we have done is we have taken liquidity cost, we have taken very large amount of infrastructure and operational cost, which financial institutions were saddled with. And now we're building, what we are doing is we're making cross-border payments instant, we are making them error-free, and we are bringing transparency or optionality in the rates, and mainly the end goal there is to decrease the 7% average cost of remittance that is there around the world. And we think we can make a significant dent by working with financial institutions around the world and with Ripple technology.
Okay, thank you for that, Naveen. So obviously, from what you both have mentioned, now there is a demand, obviously, for instant real-time payments and more transparency and like error-free transaction. Naveen, from your end, has the pandemic sort of accelerated anything else apart from all these four sort of elements that you've mentioned? Has it changed from your end?
With pandemic, absolutely. So with the pandemic, what we are seeing across our customer base is a big shift into digital, right? And then let me just clarify what I mean by that. So the first thing is, and you would see in a number of markets around the world, if you go to Saudi Arabia, you go to some of the places in the US and UK as well, you would see people lining up into shops, trying to give their money in cash. And now as these shops were closed for a long period of time, there has been a large shift from the origination side. People in the markets where they're trying to send money back to their families to digital. Now they've downloaded their apps and then made sure that their bank account or their wallets are linked to this app for the transaction to happen. So we are seeing across customers on the origination side, large scale migration into digital, right? And on the receiving side, we are seeing exactly the same thing. So when they're trying to send the money to their families back home, now the families can't line up in a shop to essentially receive cash. So they are moving to digital as well. And now we are seeing credits into wallets, credit into bank accounts, credit into a lot of other prepaid instruments, much more versus what we used to see earlier. So let's take an example. One of the important members of our network on the receive side is a company called as Bcash. Now, Bcash has over 30 million wallets in Bangladesh, almost 3 to 4 times more than the bank accounts in Bangladesh. And they are in every nook and corner because they use the shop network all across Bangladesh to be able to allow people to get access to the money that their family members have sent from overseas. And so somebody in Saudi, when they send the money to a Bcash wallet, the money sits in the wallet, and the lady of the house or the family back home can use that money in the wallet to do the shopping, or they can also do a cash out if they would want. So we are seeing a huge migration into digital, both on the send side and on the receive side across our customer base.
Okay, well, that is sort of a natural progression. And what about you for yourself? I mean, what do you see that the pandemic has sort of accelerated from your end of things?
I think Naveen covered it well. Maybe the only additional point of that from my experience I will add is in the institutional space, in a number of markets, we still see the prevalence of check-based payment. And it is quite common, for example, in the States and in certain industries. For example, share registrars in the pension space, in social and welfare payments, the prevalence of payment, even cross-border, using the traditional paper-based method, it is getting upended. We have seen at the very peak of the crisis, I remember back in March and April, at one point there were 152 countries in the world that had their mail services disrupted because of the pandemic. And that has really started to challenge some assumptions that businesses had about the need for shifting from paper-based products to digital product. And I think, as we say, necessity is the mother of all invention. I think it has broken some of those old held assumptions. And I think we are really starting to see a faster pace of shift away from paper-based payments to digital payments.
Yeah, I think apart from, you mentioned certain industries, I think in this region itself, in the Middle East, at least in the UAE, in Dubai, I think checks are still widely used when it comes to just as simple as paying our rent. So as you said, necessity is what was that? Basically, it requires everybody to go digital. But so looking into 2021, what do you see? It's already been accelerated by the pandemic, this digitization across everything. So what do you see the challenges are, particularly in this region, and how do you see yourself as an organization addressing that? Perhaps we could start with Naveen. You're the plumbers, Ripple.
So I think from our side, what we are seeing is a huge acceleration in terms of adoption of new technology. So maybe earlier, you as a financial institution, you could drag your feet and you could say, hey, you know what? I don't see evidence of large scale migration, but you can't say that anymore, right? Across all MTOs, across all PSPs, across all banks, both innovation and changing technology and delivering that customer experience on the back of the tech platform is impossible, right? So every institution relies that. So what we are seeing is actually a huge growth in take up of our services, because as institutions are realizing that they don't want to build APIs with 50 institutions, 100 institutions around the world, and here a plumber is available, which essentially offers a single with 50 or 100 endpoints. So why not use that to deliver transactions in the beneficiary countries, right? So what we are seeing is there is no choice, and all institutions are responding to customer demand to either preserve their market share or to grow their market share. And what we are seeing is, in some way, you can see the differentiation between have and have-nots. Banks that are early in this adoption cycle in terms of innovation and moving forward, and then saying digital is the only way. In fact, anything physical is much more subservient, or which have a much smaller market share going forward. And then there are banks who are essentially saying, or institutions who are essentially saying, hey, you know what, this business is not meant for us because we can't compete. So there is a clear demarcation between people who are choosing to take advantage of this opportunity and people who are giving up on the business. So the middle ground is not possible, which used to be earlier. And we see that acceleration happening today, and it'll continue in 2021.
Okay, that's good. Naveen, sorry, not Naveen, Amit, from your end as a bank, do you see cryptocurrencies actually being more prominent or regularly used than for cross-border payments? Do you think it's actually feasible?
I think I like to think of it from the point of view of what is the underlying problem that we're trying to solve. We know there are some points of friction in cross-border payment, and the industry is working together to solve some of those friction points. I think there are in my mind, three critical building blocks to unlock efficiency in cross-border payments. I think the first pillar is tokenization. That tokenization is about how do you digitally and uniquely identify a payer or a payee in a financial transaction. I think that's the starting point of efficiency, because once you have a unique identifier, you can absorb that stakeholder into the financial ecosystem. I think the second point is around financial inclusion. And one way to increase financial inclusion is through the widespread growth and access to digital devices, smartphones, and the likes. I do see a future in the next 5 to 7 years. Every human being on the planet is going to be able to have a smartphone. And once you have a unique identity and you have a unique phone number, you can be financially included into the process. And then the third building block is upgrade of the clearing systems. And when you see around the world, including in the GCC, as well as in the States, in Europe, in Asia, more and more clearing systems and infrastructure are migrating from the batch-based process to real-time process to 24/7 availability. And a big part of that transformation is also around moving towards the ISO XML-based standard that allow significant improvement in the quality of the data that can travel through the chain. So I think if you resolve for these three underlying problems of tokenization, financial inclusion, and clearing system upgrade, you really, in my view, remove the need for any other asset, whether it is crypto or otherwise, to deal with the problems of cross-border payment industry. So I think from the financial institution perspective, from a bank perspective, I feel like the industry is heavily investing in these assets, and there is a significant amount of uptake and support from regulatory bodies around the world to advance this agenda. And we also believe strongly in the work that SWIFT is doing globally as the financial backbone for institutions around the world. And we believe that the work at the industry level that is happening in collaboration with SWIFT through services like SWIFT GPI, GPI Instant, GCase, and all the other new SWIFT-based services, I think we're at the cusp of really starting to make a very significant shift in moving cross-border payments to a very digital experience.
Thank you, Naveen. Amit, thank you, Amit. Naveen, what are your thoughts on Amit's 3 building blocks? The tokenization, financial inclusion, and upgrade clearing systems.
So I think the easiest way to think about it would be, it's a big problem to solve, right? So the total amount of cross-border payments, if you take both the corporate and the remittance world and everything put together, is upward of $100 trillion a year, right? So there is not just one single solution that can essentially work for the world. So a lot of time, banks as institutions are focused on Ripple as a company. For now, we are focused on remittances for individuals and SME payments or e-commerce payments, right? And what you would find is that these payments tend to be smaller in value. So these are on average $500 payment, $800 payment, but the volume is very, very large, right? These are millions and millions of payments that are flowing every day between institutions, right? And in some way, the good correlation would be something like an email, right? So as we build the new plumbing, and as Amit talked about, as number of other institutions, they are looking at solving the problem of financial inclusion or building new platforms in terms of doing the last mile delivery in terms of the domestic payment systems. At some point, all this will come together in one single go, right? So let's take example of in India, we have IMPS, or in Philippines, we have InstaPay, or like what Amit mentioned, faster payments in UK, or fast payments in Singapore. All these are complementary to each other. So what we are solving for is one API for the world. What we are solving for is the liquidity cost, and that same can ride on the back of the local payment systems that are being built in respective market, which are 24/7, 65 days a year. So the problem itself is so big. We are just coming it from a 2 different sides, but at some point, these 2 paths will cross each other. And at the end, the customer will essentially look at the complement of how these technologies or how these solutions can work with each other. And I have no doubt they will, because at the end of the day, what we're doing is we are delivering an exceptional customer experience. We are lowering the cost for the customer, which is trying to send the transaction, and we are trying to make it error-free. And the goals of all institutions is the same, to say, how do we serve our customers better? And in case we fail to do that, and clearly the writing is on the wall, the customer doesn't have time in the day for any one of us to essentially say, hey, I'm going to put up with the inferior product when a superior product is available out there. So in terms of my reaction is, these are complementary initiatives, and at some point you would see them coming together in a lot more closer fashion, and though right now they may look to be different.
Okay. We have about 8 minutes, 5 to 8 minutes left. We do not have questions from the audience, but what I would like to do is, if either of you could have say some last sort of conclusive words about what you think the cross-border payments roadmap should be as we go into 2021, having gone through the last 6 months that we have.
I can go first, maybe in conclusion. I think I'll start by saying that there are some challenges along the way. Cross-border payments are inherently complex, and it is our job as practitioners to simplify and digitize the cross-border payment landscape. But the direction of travel is very clear. It's very secular. I think I can safely say that in the next 5 years, maybe 7 years, most of the countries around the world will adopt real-time payments as an enabler of digital commerce. There will be some niggles along the way, and uh, in terms of Naveen mentioned about interoperability between schemes around the world, but I think those will get worked out. I think there are two or three important challenges that need focus, that need progress over this next 5 to 7 year period. So the first one is AML and sanction screening. So as money moves from across borders, the ability of the appropriate remittance data for the payer and the payee to work its way through the various hops in the payment chain is very critical. And I think that has been, in some markets, an impediment to opening up the domestic real-time schemes for cross-border use cases. So I think that's one area where the industry has to work closely with our regulatory bodies in the local markets to enable the schemes to become compliant with cross-border payment data requirement. I think the second one is liquidity risk management. Traditionally, the bank model, which is batch based, the bank treasuries work 9 to 5. But when you start to move money at a faster velocity and 24/7 after market hours, the models with which liquidity and liquidity risk and regulatory reporting has to be managed at the bank treasury level, I think that model is still work in progress. In fact, we're just at the start of that journey. And I think the third one is FX controls. Uh, a lot of the emerging markets specifically have currency controls regulation in place, which mean that every time money moves across border, there is a lot of paperwork involved in scrutinizing the validity of the payment against various exchange control requirements. And that is a manual process that takes a lot of time. And a lot of effort has to undergo to make those processes also more digital, because making payments faster and instant is only one part of the story. If it is still going to take uh, an institution several hours and in some cases days to process documents that support the payment, then the real experience is not instant. So I think these challenges are recognized at an industry level, and I think over the next several years, the industry will work its way through to resolve these.
Okay, thank you for that, Amit. Naveen, from your end, how do you see us going
Yeah.
into 2021?
Absolutely. So Nabila, the visual that I want you and your audience to have is almost like a shopping comparison website. So today, let's assume you wanted to buy shoes. You're able to go on a comparison website, which is able to show you both in physical shops and in number of e-commerce places, what is the price of the shoe, and then you can choose. And or like, for example, you're buying tickets, then across multiple platforms, it can tell you which website gives you the best price on the air ticket, say from Dubai to Hong Kong, right? So we would expect the same thing happening in the cross-border payment side as well. Say, for example, Nabila could be an individual or it could be an institution that's making the decision. What they will be able to see very transparently to say when Nabila is trying to send 1,000 AED to someone back in Bangladesh, what are the three options that are available? So the one option is, for example, to go through a bank. The second option is go through, say, for example, somebody like a PSP. The third option would be to use crypto in your transaction and make the transaction possible, right? And all these three options will compete to get Nabila's business, right? So they will compete on price, they will compete on error-free service, and they will compete on speed of delivery. And then Nabila will be able to choose to say, hey, you know what? I'm okay with a 2-day delivery if the transaction is free, right? Or she will say, hey, I can pay 1 AED because this is delivering instant, or this gives me a better FX rate. But she would upfront would know what is the time it will take for the transaction to be delivered, how much exactly in Bangladeshi taka will her family get in the bank account, and it would be error-free. That means the name, the account number will be pre-screened, and all the AML checks and the compliance will be done before she presses enter. And once she presses enter, depending upon the choices that she has made, the options that she has chosen, the delivery will happen on the other side. So it will be same as an Amazon experience that you have today for buying goods and services. You would start to have on cross-border payments as well. And underneath will be a plumbing like Ripple, which essentially sends a API call to these three institutions which are competing for Nabila's business, and then say, hey, you know what, here's Nabila, here are the choices which these three institutions can give you, and you make the choice how you want this payment to be settled, right? So we see the customer becoming more and more powerful. They already are, but they're being given the optionality to use different networks and to be able to use different to deliver the money that the way they would want. And this competition is truly what is going to create the next level of innovation, next level of customer service experience benchmark. Because once Nabila has that experience, then she's not going to go back to anything else. Once she shops on Amazon, then she loves for all the suppliers to compete for her business, and then she stays as an Amazon customer. And in this case, you would stay with that financial institution who's able to provide this optionality to you.
Well, that's very interesting. So basically, with digitization, everything is going to get a lot more competitive on both your ends, for sort of technology provider and a financial institution as well. Anyway, so that is all the time we have today. I really hope that everyone's enjoyed our conversation and found it very useful. I know that I have. Thanks again for your time, Naveen and Amit. It's been a pleasure speaking to you guys.
Thank you, Nabila.
Thank you very much, everyone.
Good day.
Thank you, Nabila. Bye, Amit.
Bye.